Right team, welcome back to another video. Now the amount of traders on their come up that just love basically fucking themselves and self-sabotaging themselves is crazy. And hence the title of this video. You might be thinking, what the hell is he on about? Basically, this video today is going to be explaining, firstly, why the hell you should stop fucking your trades, okay? And you'll see what I mean by that. Secondly, why and how to systematically, psychologically make sure that when you are in trades, you are leaving them the hell alone. And we're going to cover one important detail later on in the video when you should interfere. But it is a very niche example and it's very specific and it is based off data and it is based off proper math, instead of it being a subjective feeling. Because so many of you will get into a trade and then you will toy with it, you'll muck with it, you'll basically screw yourself, and that trade ends up being a very well executed trade, and then you end up leaving with a very, very poor outcome because you've manually interfered. So we're going to go through a couple of points today to how to stop yourself doing this, how to rewire yourself up here in terms of your thought processes, how to think when you are in that trade, okay? And how to then self-manage. So the outcome of each trade you take is the right outcome, the outcome based on probability, based on your edge, and it allows your math and your data, which is ultimately what a profitable edge is, with hopefully very good positive expectancy. It then lets those trade outcomes play out with the law of probability, what ultimately trading is a game of. So common trading behavior, and this is especially with break-even traders, and I do a lot of work on break-even traders, putting them from obviously inconsistent, basically, which break-even trader is, into profitable. The problem with break-even traders is they get better and better, and they take an optimal setup. So they've done the hardest bit right, as in they followed their rules, they've executed their plan, and they've done what they needed to. They've got their stop loss in a great position. They've got their targets in, a well-calculated position based on their data, based on their strategy. They position size properly. They've waited for their optimal entry criteria, and they're in a great trade. They're in an optimal trade, we'll call it, because that's what it is. Now, the problem with taking this is they've done the hardest bit, as I just said. They're in the optimal trade, and then as that trade starts then playing out, they start seeing price movements, price swinging, but when I say swinging, I mean on the lower time frames. And because they're sat watching that trade when they shouldn't be, they start seeing these little price movements, maybe on the 1 minute, the 5 minute, the 15 minute, which you are going to see, and this is the truth, you are going to see price fluctuations, a lot more noise, a lot more stimulus that, quite frankly, the trader does not need to be viewing or needs to be involved with. Because what it ultimately does, it starts making you second guess there. It starts to make you think, actually, oh, is this a good trade? Should I be in this? It starts putting that self-doubt in your mind. Now, if you're a trader or aspiring trader that has been a lazy person and not done huge amounts of data on your strategy, then you guys suffer the most of this. And rightly so, because you've been lazy and you deserve to. But you guys suffer the most. Because if you had have done the data, you will know over thousands or even just hundreds and hundreds of data points or back-tested and forward-tested examples of your edge and your rules, your strategy, that trades are going to fluctuate. They are going to go into some drawdown first before they maybe hit your targets and end up being a winning trade. You know, there's all these little things that doing this data helps you pick up on. And all these bits of data, right, and these outcomes you learn about your system by doing the hard work and not being lazy really, really helps you manage this when you're in a trade, especially when you're in drawdown in a trade. Now, we all know drawdown is healthy, right? Trades are going to go into drawdown all the time before then ultimately hitting your target and being a brilliant winner. And the problem is with, again, aspiring traders, they are always looking for certainty in the markets. They are always looking for certainty in their trades. They're very emotionally attached to the individual outcome of each trade. This needs to be a winner. This needs to be a winner. And when they have losing trades, which any great system and any great trader will have fairly frequently as well, when they have those losses, they become very emotionally attached. So when they get into trades after that, they're still carrying heavy weighted baggage psychologically from those other trades, thinking, well, I can't lose again. I've already had 2 losers on the bounce. I've already had 3 losers on the bounce. And again, it comes back to, if you've done the data on your system, you'll know how many natural losses your system can go on as an average. That is normal. That still gives you brilliant positive expectancy. That still means you're profitable at the end of each month. And so this is why doing that data is so important. I say to people, you should really have 3 outcomes per trade. So obviously that is a loss, that's your stop loss being hit. That is obviously your take profit being hit as a winning trade, or it is a break even as well. Now, your system may or may not have a break even protocol. Mine does, but that is based on, again, the data I've done. So I'm moving to break even based on my system and the math, not because I feel like doing it, okay? Because as you all know, if you're prematurely moving stops to break even, you can be prematurely tagged out of trades before it then goes on in your direction and ends up being a winner you've missed out on. And again, this is where I think a lot of lower time frame traders will struggle with screwing themselves. Obviously what this video is about today, because unfortunately the nature of the game is if you're trading the lower time frames, you know, your stop loss size is naturally a lot smaller. Of course it is, because you're trading the lower time frames, the 1 minute, the 5 minute, the 15 minute. And unfortunately, as we know, perfection doesn't exist in trading. And so when you trade those tiny time frames, you have to be ultra precision, and it's impossible because the market is unpredictable. The market has a degree of randomness to it. You know, you are going to get wicking, spiking, you know, increased volatility, and unfortunately, this is why so many lower time frame traders never make it and can't even string together, you know, a profitable 6 or 12 months, which is a shame. And so I say to people, if you zoom out a bit, you go higher time frames as I do, sort of 4 hour daily, weekly, you know, and execute off say the 30 minute or the 1 hour instead. And if you haven't seen my strategy before, there's countless videos on here. I hold nothing back. Go and check them out. But if you zoom out a bit and you increase your trade duration when you're in your trades, you will naturally have a bigger stop loss like you can see on here. And as you can see, I'm still in this trade, but I came into drawdown. I came about 6-7 pips away from hitting my stop loss, but it's gone back into profit now. And it's also allowed me to scale into another trade as well. So you need these stop losses to give you forgiveness, okay? Because perfection doesn't exist, right? With anything in trading. So the bigger that, not the bigger, obviously it doesn't need to be ridiculous, but the wider that stop is within reason, you're going to have more breathing room. You're going to sleep better at night if you're holding trades overnight, okay? Because price can do its thing. It can be erratic if it wants. It can ride your trade through news and still be okay. And there's a certain degree of peace that comes with that, okay? Whereas if your top stop loss is 6 pips, 10 pips, anytime you get into profit, you're going to be thinking, oh God, I want to go to break even now. I want to take risk completely off. And then you'll get tagged for break even, or you'll get tagged for a loss, and then it will go onto your intended targets. It's really stressful for the trader, and this is day in, day out. And so you're giving yourself an unnecessary headache. And I say to people, a brilliant strategy, a brilliant edge is something that plays out over a long period, a long amount of data. And every time you interfere with a trade and you manually close it based on emotion, you manually close it on because you've seen a bit of chop and change on the 5 minute or the 15 minute and it scares you, you're screwing with your positive expectancy, you're screwing with letting your edge play out, and you're screwing with ultimately your monthly and quarterly P&L. Because daily P&L, you're going to have losing days, of course. Weekly P&L, you're going to have losing weeks. But if you're profitable at the end of each month, that is a huge testament to your consistency, your discipline when you're in natural winning streaks and losing streaks. It's the monthly P&L that we care about. So every time you try and fuck with your trade, just remember the first and the second and third order thinking of that decision making or that poor decision making. You might feel good at the time because you may have saved yourself a premature loss, but then what's the second spillover to that? Okay, you then start eroding your edge, you start eroding your positive expectancy, and so you really can't be doing it. And so many traders are so, as I mentioned earlier, so focused on the individual outcome of each trade, they don't think long term. And by the end of the month, they're shocked as to why they're stringing together multiple losing months, one after another. So I say to traders, if you have done everything right in terms of being a brilliant manager and a brilliant executor, and that's what great trading is about, really, you know, following your system day in, day out. If you've done all that hard work at the start, you've waited for your good entry criteria, it's all been confirmed, and you're in the trade, you've done your bit, all right? You've got your predefined stop loss. If it gets hit, you're getting taken out of the trade for the right reasons instead of prematurely, and you have your targets as well, again, based on your system. There's not really a lot else you can do. You can set an alert. If you do have a break-even protocol, you can set an alert for that so you can move to break-even when it meets your criteria. But other than that, you let it be, you go about your day. And this is the beauty of the higher timeframes again. Way less stressful, way less noise, So there's less temptation to fuck with your trade, pardon my French. There's less, stimulus on the charts to make you second guess yourself. It is so much better on the higher time frames for so many reasons. And unfortunately, people don't learn these lessons until it's far too late. They've blown far too much money, and trading ends up never becoming a real long-term outcome for them. So guys, the only time we interfere with a trade manually is if we see, and I'm going to show you now, if we see a massive change on the corresponding index. So most of this video you have seen my CJ trade and NJ trade running in the background, right? I'm in these as we speak. And they are fine, right? That is what it is. But the basket, and this could be the DXY if you're trading US dollar pairs, this could be the British pound index if you're trading pound pairs, you get the picture. The Canadian dollar index, you get what I mean. If we start to see, and this is only on the 4 hour and above, but it's specifically on the 4 hour, because for the daily to change structure, the 4 hour has to change first, right? So on the 4 hour, if I started seeing, let me just move that. If I started seeing the 4 hour turn bullish, which would be basically a break above that most recent lower high, and point of structure, then I can start to maybe manually interfere with my trade if it's in the green, because the chances are, because this is the 4 hour, because it's the higher time frame, if we see a change of structure on the 4 hour, it's highly likely price is going to continue then breaking out. So we see the break, the body close, it's highly likely then that is going to happen, okay? Because it's the higher time frame. Now this you'll see happen all the time on the 1 minute, the 5 minute, the 15 minute, and it's just pure noise and just shoppiness. And this is why again a lot of lower time frame traders struggle with the stuff we mentioned earlier. So if I see that change, then of course I'm then going to look to manually interfere with my trade. Now, if my trades are in profit like they are on here, this whole thing is running risk-free as we speak. So obviously I would maybe just leave this trade with a couple of percent when it hits my stops in profit, etc., etc. But that is the only time I'd interfere. When the index, there's a change of structure on the index, but that is the 4 hour and only the 4 hour and above. Now you don't need to worry about the daily, because for the daily to change structure, the 4 hour has to change first. So this is why you look at the 4 hour, because that can tell you a huge amount, okay? And that is the only time you can potentially interfere with your trades. Otherwise, let it hit take profit, let it hit your stop loss, and be at peace with that, okay? If you can never be at peace with that, unfortunately, you'll never make it. Trading is not one of those games where the longer you do it, you don't necessarily get better just because you've been doing it for 5, 7, 8, 9, 10 years. You have to get better at the time. You've got to learn from your mistakes. You've got to work on yourself, physically and mentally on and off the charts. If you don't do that stuff as the years go by, there's no guarantee you'll ever make it. It's simple as that. That is how savage professional trading can be. And so to summarize, the last thing I'll say to you, as a trader, your job ends once your trade has been managed and executed. Your job's done. Let the probabilities play out, let the market play out, because every single trade you take, and when you look back on your journal every weekend from that trading week, every win you've had, every loss you've had, every break-even trade you've had, you should look back on every single one of those trades and go, I was brilliant, I executed perfectly, I followed my system, I didn't waver technically, I didn't break any rules, and I would take those trades, every single one, another 100, 250, another 500, another 1,000 times. That is then, if you do that discipline and with consistency, that is when you'll start to see that monthly P&L green every single month. And it is possible. I went on a 22-month winning streak between 2024 and 2025, okay? It is possible, okay? Don't get me wrong. Some of those winning months weren't amazing. They were just 2%. But it is plausible if you get things the right way, if you're a pro trend trader, if you execute off higher time frames, okay? If you align the macros with the higher time frame indexes, then with the higher time frame FX pair that you're trading or index, whatever you're trading. If you can do that properly and get better and be disciplined and do the work on that system, so again, you've got the good confidence behind you, it's scarily exciting what is possible, I can assure you. So guys, I hope that helps. Stop fucking with your trades, okay? And let them be.